Welcome to this video. Today I'm going to be making a stock analysis on HP. Now you probably know what HP makes. They make computers, monitors, printers and stuff like that. Now the reason I like them quite a lot is because of their dividend share. I'm just going to show you right here. As you can see, they pay out 4.6% dividend, which is quite great. Now I just also like the products that they make, which is also why I'm making this analysis. Now if we take a look at the stock graph, as you can see, right now it is trading quite low compared to previous where it was trading up almost up in 40. As you can see, when we go back a bit, it was down in almost this 24 range again, as you can see. But so as you can see, it is quite a choppy stock. I would say, as you can see, it has very choppy RSI, as you can see, up and down. It doesn't really trade in the upper channel quite a lot or in the bottom channel quite a lot. So it and we see golden crosses and death crosses all the time. So yeah. Now, if you like this video, don't forget to like and subscribe. And remember, this isn't financial advice. This is purely education and entertainment purposes. So yeah. Right now we are trading down here in 23.84 with this pre-market drop of 1.8%, which of course is unfortunate, but that is given it rose almost 11% yesterday. Now, unfortunately, as you can see here, we do see some red E's down here, which means that they have negative earnings or earned less money than anticipated. Luckily, as you can see, it is barely anything, and all the earnings minus 0.8%. Then we have this one minus 2%, and then this one minus 0.05%. So they're quite good at calculating that. And as you can see, that when the positive ones is 0.04 and 1% up. So they actually guide very close to what their estimates earn. Now, I also just like them because of dividends, as I told you. As you can see, they pay out dividends several times a year. They pay them out 4 times a year in total, which is quite great because that means you can more often than not buy new stocks and get that dividend ball rolling. Now, if we take a look at the RSI down here, as you can see recently, it hasn't been performing that great. More often than not, it is trading down here in the bottom channel. Now, if you don't know what RSI is, that is relative strength index. Is it above 30 but below 70? It is in the upper channel, which is upwards momentum. Is it below 50 and above 30? It is in the lower channel, which is the A, which means that has lower momentum, which means there are more sellers or shorters than buyers. Now, when it's up here, as we see it here, we see a breakout right up here. That is because it's being overbought. As you can see, it spikes, and then the spike gets killed quite quickly. We do see it again down here below 30 with some pitfalls here, as we see. It's actually pitfall quite low, even below 10 right here. When was this? This was in February. Yeah, that was on this earning where it was down by almost 1%. So quite crazy that it actually fell that much, just given that the earnings was almost what was anticipated. And of course, also fell on dividends because stocks usually take a fall with the percentage of their dividends. So that would have been what 4.6% for the day, which is also why we did see a spike in the dividends there. And of course, here in start April, we are seeing it tank a bit because of the tariffs. Now, but then again, yesterday we did see it spike quite a lot, and as you can see up here, we did see it almost 11%, which is quite nice. Given that the stock itself has been tanking quite a bit ever since November, it has just been a downward spiral, and we did see a gold death cross, of course, here in the 4th of March, and we did just see it trading more and more down. So yeah, the next proper support line is all the way back from 23 and is where we are currently at. Although before that, then we have to go up here to 28 to even have a proper breakthrough level. So if we break through 28 up here, as you can see, if we break through 28 up here, we might see it increasing upwards, but we still have quite a few ways to go from 23. Now, as you can see, as I talked about the earnings already, so I'm just going to skip that as well as the dividends. But of course, it is quite insane that they pay out this great dividends. We rarely see that with tech companies. Now, their earnings, they're quite good. As you can see, they're raking billions, but their margins are quite low. It's about the same with Dell, one of their competitors. But they rake in billions and billions of dollars. They make great laptops, and then they also make very great gaming equipment and monitors. But their primary thing that they are great on is printers. Actually, they are the largest printer and printer ink company in the entire world. So they rake in a large percentage of their cash on that. And printers is just that once you buy a printer of a certain brand, chances are you're gonna stick with that because you know how it works, which is a huge thing for HP, which is why I like them quite a lot. I personally have an HP printer and it works perfectly fine. Of course, nobody likes to use printers because more often not there is something wrong with them. But you're just gonna stay with it, and they have great printers, both for professional and personal use. I use them at my job and I use them at home. So just the printers, it might seem silly, but that is really the highlight of HP. Now, if we look at some seasonals here, let's just go back to 2010, take 15 years. As you can see here, it's quite a large variety of how well they perform. As you see, we have some years where they are down by 30%, almost from 22, but then again, basically everyone were in 22. Then we have 15 down by 38%, 11 down by almost 40%, and 12, 46%. Then we see some years like 13 where we're up by 86%. And many of the years where we are up quite decently, besides from last year, when we are up, then we're 12%, 18%, 27, 41, 45, 50, and 86. So it is quite a coin flip, but of course, I would personally only own this stock for the dividends. I wouldn't buy this stock at 23 to expect to sell it at 50. I would maybe buy this stock at 23, get dividends for 10, 15 years, then sell it at 28. So I wouldn't buy the stock for selling it at a higher price yet, but of course that is why you buy any stock, but it's not the main focus. Like Nvidia, you buy Nvidia to sell at a higher price. HP, you buy it to get dividends. Now for the day, it was a sell. Now for the month, as you can see, it is still a strong sell, and that is just because it is downhill, downhill, downhill. Also, we did have this death cross, and as you can see, we have quite a long distance between the 50-day moving average, the green line here, and the yellow line here, which is once these two cross, the green one goes above the yellow one, we have more upwards momentum than downwards momentum, which means that it is more likely than not to keep going up, and we're missing that at the moment. Now, analyst rating on this stock are quite nice. As you can see, we have 3 strong buy, 14 hold, and 1 sell. And even though we have 1 strong sell, we can see that it is still above where we're currently at, which means even the strong sell recommendation or price target is above. So 80 analysts here, quite realistic, and as I said, it's not going to be a stock you buy, and that's also a reason why this is so many holds, because that is just the reason you would have this stock. But a 42% up, I think that's quite reasonable, to be honest, just given how much it has fallen. Now, personally, I wouldn't buy into it yet because I used to saying don't grab a falling knife. So until this is flattened out a bit, I won't personally get into it at all. But yeah, it is quite interesting, and you can see they actually guide quite decently. Some years they're up, some years they're down, but in the future it is actually quite the same as it is currently. So I just see it being trading in the same distance where it is right now, which would be between 45, as you I believe it was 45 back here. Yep, it was all the way up in 41. So I believe it's gonna stay trading between this and then 23 where we're at now. So it is gonna be a stock that goes up and down. It isn't gonna be just straight up or straight down. It is gonna be zigzagging all the way up, just like the RSI. And as you can see, this graph right here. And then again, it is a huge company, as you can see, with 58,000 employees. So analyst rating, of course, also decent. Now, it isn't quite interesting stock, but if you buy this, buy it for the dividends, not for the hope to sell it for 10 times what you bought it from. Now, if you did like this video, please don't forget to like and subscribe.